Hey, thanks for tuning in today. Today, we're going to be talking about DSCR loans specifically for investors of real estate in 2024. If you're looking to buy residential real estate, whether it's 1 to 4 units or maybe even a bigger project, all the way up to 29 units on the commercial side, a DSCR loan is something you need to look into if you're an investor. If you don't know where to start, or maybe your income isn't exactly the easiest to work with, maybe you have many moving parts, a DSCR loan is the best place to start for investors who need creative solutions for advancing and enhancing their real estate portfolio. With many properties or many businesses or just moving parts when it comes to income, creativity is key. And you may not qualify traditionally if you have a lot of moving parts because in a traditional lending system, you have to fit the mold. Otherwise, it doesn't work for a lot of banks and credit unions. This is where a DSCR loan comes into play to help you achieve your real estate goals. Here's how a DSCR loan works. Let's start at the very top and walk through every step of the process. DSCR stands for debt service coverage ratio. So is what you're looking for is, does the property as an investment property offset itself with income? So on this program, we're not looking at your income from your job. We actually don't even list income or employment on the application. We're literally looking at, does the property pencil out on a 1-to-1 ratio to support itself? We use the current rental income for the property, whether it's the existing lease or the rent schedule that comes from your appraisal throughout the purchase process. We then take the income that the property is generating and divide that by the cost of the property, which would be the principal, interest, taxes, and insurance, which gives us our debt service coverage ratio. You, of course, want this to be as high as possible, above a 1-to-1 ratio for the best interest rate and most attractive programs. However, you can go all the way down to a 0-to-1, meaning the property doesn't even have to pencil, but I will warn you, the interest rates are not very attractive. Like I just mentioned, ideally, we want a DSCR ratio of 1-to-1. However, we can go down to 0 if necessary to make the program and the product work for what you're trying to achieve. Here's a couple key DSCR guidelines at a very high level to give you a rough overview of what this program is capable of. This program is for investment properties only. You cannot use it for a primary residence or a second home. It has to legitimately be a rental. You can go all the way up to a $4 million loan amount. As I stated earlier, there's no income verification and no employment verification. The only thing you're looking at on this is, will the property support itself and what are your assets like? You have to have some level of reserves and you have to be able to show you have the down payment to complete the purchase. Another key piece with this program is there's no cap to the amount of properties you can have financed. When you do traditional lending for conventional investment properties, you typically can't have more than 10 properties financed. A DSCR, for all intents and purposes, is a business loan on the commercial side, so a lot of times it doesn't even report to your personal credit, so there's no limit to how many DSCR loans you can finance. There are multiple loan options available. There's a 30-year, you can do a 30-year interest only. There's also even longer terms if you wanted to look at a 40-year, but it's very rare and those programs change often. When it comes to a purchase transaction, you have to put at least 15% down. And when it comes to refinances, depending on how many units the property is that you're trying to do a DSCR refinance on, you're capped at either 20 or 25% of your total loan to value. Another really cool piece with this one is maybe you're a renter and you just want to get into investing, but you don't own a primary home. A lot of lenders have overlays where you need to be a homeowner, but we have specific lenders that as long as you have above a 640 and you're a first-time investor, this is a very doable program for you as well. Lastly, to wrap up on the DSCR loans, this is the best program out there, in my opinion, for short-term rentals with Airbnb or VRBO. On this program, you can use the short-term rental income for qualifying as well as the appraisal, whichever is stronger. To wrap this video up, our last most common question is, how can you hold the title to the property? Can it be in an LLC, an S Corp, or a C Corp? And the answer to that is absolutely yes. It offers flexibility on title, and also when you hold it in one of these, typically is what you find if you set the file up front correctly, that it does not report to your personal credit. So when you go to finance something else on traditional financing with a conventional loan, it's not even reported, and you have to disclose it on the application, but it does not impact your credit as a liability. That's the very high level overview of a DSCR loan. If you're ready to jump into investing and utilizing this program, feel free to reach out. All my contact information is in the description, as well as all over my profile. I'm happy to help and answer any questions you have.